Hi traders, a quick market update from me, Fawad Razakzada, market analyst for City Index. Overnight, we had some stronger than expected economic data from China. We had GDP coming in at 4.8%. Admittedly, this was below 5.2 in the previous quarter, but it was nonetheless better than expected. Industrial production came in at 6.5% year over year compared to 5% expected. So this was a massive beat. Retail sales came in at 3%. So stronger data from China should be good news for commodity dollars, you would think, for as long as there's no flare-up or further flare-ups in the trade war between the US and China. The likes of the Aussie dollar come to mind, which could benefit from the stronger Chinese data. And also watch out for potential breakout in copper prices. Looking at the economic calendar for the rest of the week, we have some Canadian inflation data to look forward to tomorrow. UK CPI is the highlight on Wednesday. Retail sales from Canada on Thursday. Not a lot from the US because of the ongoing government shutdown, but we do have inflation data on Friday from the US. Let's see if this will be released, but headline is at 0.3% on a month-over-month basis, and core is expected at 0.4% month-over-month. On Friday, we also have the manufacturing PMIs and services PMIs from the Eurozone and elsewhere. The European ones in particular will be quite important insofar as the euro dollar is concerned. So let's have a look at the euro dollar to start with. Last week we saw a breakout from this continuation pattern, namely a falling wedge pattern to the upside. But resistance held at around the 117 handle, and this has stopped the euro dollar from climbing towards 118, for example, or even 119. Instead, it's retesting the breakout area of around 116.50. which is now a key short-term support level to watch. Ideally, from a bullish point of view, you wouldn't want the euro dollar now to dip below 116 or thereabouts, because that's where the backside of the broken resistance trend of this continuation pattern comes into play. So for as long as it now holds above that area, I think the risks are skewed to the upside from a purely technical point of view. And resistance above here is at 117, which has already been tested on Friday, and it held. But if we go above that area, then 118 is the next area of support, or resistance, I should say. And then above that, you have the September high coming in at just above 119 handle. So my view is that the euro dollar is likely to continue consolidate around here and potentially push higher given the breakout from the resistance trend of the continuation pattern here. Gold prices fell quite sharply on Friday. From the record high, it dropped about $190, which is a huge drop on an intraday basis. I think this was one of the biggest drops in months, if not years. But support held where it needed to. As I zoom in, you can see this area between 4,180 to 4,200. This area had been resistance on an intraday basis, and it held as support. So far, it's looking good for the bulls. And so long as we don't now break below Friday's low, which comes in at around 4,186, then this should keep the bulls in charge. But if we do go below that level, then at the very least, I would expect some downside follow through towards 4,100 or thereabouts, where we have this bullish trend line coming into play. So there is a potential for modest selling if the low from Friday gets taken out. But I say modest because the trend is quite strong, and in the past we've seen several bearish looking candles. For example, this one from a couple of Thursdays ago, when it looked like the market had topped out at around the 4,000 level. But instead, the trend just resumed and we pushed significantly higher from there. There was a lack of downside follow through. And again, this is what we're seeing, a lack of downside follow through. But even if we do dip a little bit deeper, the trend is quite strong, and I wouldn't be too surprised if the buyers were to step back in at around the 4,000 level, should we get there. Now let's look at a couple of resistance levels then. 4,300 is a psychologically important level, obviously it's a round handle. We couldn't hold above that level on a closing basis last week. So that level is the first immediate resistance level to watch. Above that, you have the 4,400 and then 4,500, these run handles. They could all trigger some profit taking. Also watch out for some resistance around the high from last week, 4,379. So those are some of the key levels to watch on the upside, but the trend is still bullish and I wouldn't fight against it despite the reversal looking candle on Friday. Until such a time we get lower lows and lower highs, there's no point in fighting the trend, which is strong. Remember, the trend is always your friend. Some would say until it stabs you in the back, but that's another story. Generally, it pays to go with the trend, and I would stick with that mentality, trading gold for the time being anyway. Don't forget to like and subscribe, and for more market updates, make sure to check out the news and analysis section at cityindex.com. I'll see you in the next video. Take care.